Thank you, Ed. Let's do this fast. So what we got here is just a quick chart showing a pie chart that, we try to weight it equally. We look at the fundamentals. That's the white papers. You got the sentiment. What's the mood of the people? That's going to be Saturday Night Live this weekend for Dogecoin. We'll talk about that in a moment. And then there's also geopolitical world leaders. What are they saying? Regulatory environment, securities registrations, all of this, IMF, central bank digital currencies, rules and laws. We've been paying attention to that since 2016. That's why we're on top of such accurate predictions all the time. What's happening next in the regulatory environment, even before the regulators themselves figured out what they want to do. So technical analysis, it's not technical like the technology, it's actually reading the charts and graphs. And as you can see on this jumping pie chart, there's days when some things are going to be more important than other, but roughly rule of thumb is about equally we look at all of them. So for today's sake, we're just going to look at charts only. I'm skipping the fundamentals if it's a good or bad coin long term. Okay, so we're just going to look at the current timing, which we can use technical analysis to help us pinpoint when to execute, when to get into a trade or not. So before I get into this, I also want to point out though that there's different ways of looking at analysis. There's also tons of different strategies when it comes to looking at charts. So I don't want you to feel overwhelmed. You don't need to learn every single strategy. You only need one or two strategies that you can repeat again and again and consistently make money in the charting world. But it's not as complicated as a lot of experts will have you believe, that they simply wanted you to hand over your money to them to do it for you. It is just, you got to start learning. And while we're on that thought, I want to jump in here real quick and just give a quick disclaimer. So we are not licensed financial advisors. Actually, as a matter of fact, Ed, myself, and nobody on this call today is making themselves out to be a lawyer, tax advisor, or financial planner or advisor. So we have to tell you, always seek the services of a certified professional before making any decisions. Anything we share today is just strictly for education purposes and entertainment only. Do your own due diligence. Past performance is not an indicator of future results, and don't hold us or anyone on this call liable for any decisions you make. With that out of the way, let's jump right into it. Let's look at some charts. Let's have a look at what we can see in the markets and what's going on right now. Again, Ed, maybe you can help me out with the shouting out these particular coins people want me to add onto the list. And let me know whenever we get to that point. Awesome. So let's have a look here. You can see my screen here. First of all, so I'm going to try to use the similar indicators. I do use others, but we're just going to keep it clean. The same indicators we're going to stare at for every coin, so that you'll get in the habit of realizing what do I look for each time. We do this each week. And then also, let's start right off. So let's got Ethereum BTC, right? So before we even look at any coin, okay, I got ETN here. So any coin, I'm just going to compare the Ethereum to Bitcoin ratio.
Yeah. Okay. There's one Harmony one.
Yeah, got that one. And so basically Ethereum to Bitcoin ratio. So what we're going to do here is I'm going to zoom out. And just so you know, I've traded short-term, long-term, medium-term. It's all different for different people. What I want you to know is that there's different strategies for holding for a week, a month, a day, 5 seconds. I've done them all. So we're just going to look at basically 2 time frames for each chart. We're going to look at the swing trade, like holding it for a couple weeks, and we're going to look for the day trade. Would you want to hold this over the next day or two? So as we can see here, the Ethereum to Bitcoin ratio has not been this high since 3 years ago. Okay, so we haven't been this elevated since the summer of 2018. Okay, so basically you could almost declare, Ed, today on this call right now, we are officially in altcoin season, just because of the market cap dominance of Bitcoin having decreased. In fact, let's pull that up. This is worth it. I'm going to go to the old-fashioned coinmarketcap.com. Let me clear this off the screen, and let's go to, we got here research. So global charts. Okay, so what we've got, by the way, I do prefer personally CoinGecko than CoinMarketCap. That's just my preference. But this website does have a nifty chart here. There we go, as I expected. So what we can see here, I'm going to try to enlarge this for you. What we can see is the Bitcoin is the big one up here. We can see back in 2018 summer is when Bitcoin dominance was at its lowest ever. And we are getting to the lowest point since then. Okay, so what that means is I'm officially declaring here unofficially that we're in altcoin season once again, meaning the dominance of Bitcoin has gone off a cliff. This time it's done it gradually, which is more dangerous. You guys know when I say something goes up too fast, it can come down quickly. When it goes up slowly, it can come down slowly. This is now slowly moved into altcoin season compared to last time. Okay, so this means this altcoin season could be forever, potentially. Just first time we may have said that. So keep that in mind. If this continues on this trend, we actually made predictions in a lot of presentations we did like years and years and years ago with Ed, saying that eventually there is a possibility that the king can get dethroned. Just like no one uses Netscape Navigator anymore to search the internet with their browsers. Just because you're the first or biggest doesn't mean you're going to be the best and stick around forever, especially when it comes to technology. The hash rates and all that can make you easily dethroned. And I did actually at that time make a prediction that Ethereum could one day be bigger and larger in terms of price and or market cap than Bitcoin. And suddenly we've started to head in that direction. Bitcoin has dropped off. We see a couple coins over here that are performing better, one of which is Ethereum. Okay, so that's something to keep a note of. I think this one is Litecoin, if I'm not mistaken. Okay, so that's also grown in dominance to make up some of that loss for Bitcoin's market share. So this is important because this could continue this trend. So the charts today we're going to look at say, okay, Bitcoin went down, so it may mean Bitcoin will go up. Totally, that is a possibility. We're going to keep an eye on this each week now because this is going to be an important update. Are we in the altcoin season? Are we in altcoin forever season? Or are we in just a buy the dip kind of mood for Bitcoin and it's going to regain dominance? So same thing applies as it did 3-4 years ago. We're going to keep an eye on the central banks and IMF and all their comments and statements. I'll do that for you. We'll give you updates here every week. But having said that, let's jump right back into the chart here. So we can see the chart for this. All the indicators are obviously going to state that this is overpriced. And we could see if I go to the daily candles here, we can see it's way too high. So any kind of chart reader will tell you this is the perfect time to, in this particular case, buy Bitcoin and sell Ethereum against those two, comparing them one another. Again, nothing to do with fundamentals. This is strictly reading a chart. Okay. I'm a fan of Ethereum more than Bitcoin, just so you know. Okay. So as you can see here, I think the long-term prospects of Ethereum are better. We talked about the developers. 80% of them are on the ERC blockchain. So this could be potentially just stay up here. Okay. But the charts say this is not the best time to be buying. If you had to choose between Ethereum and Bitcoin, this chart screams that it's overdue. You can actually see I made a prediction here saying it may come back down. What did it do? Instead, it shot up even higher. So that means we're on that trend to continue being now Ethereum. I have a feeling it's just a matter of time that it will be a higher value in terms of market cap than Bitcoin. That would mean this chart would keep going up. Okay, so this is telling us Ethereum measured in Bitcoin price. So now we can jump into all of the coins and actually research. I can see the chat's blowing up here, obviously, over these comments I'm making, as to be expected, but I'll get to those at the end. So here you can see Bitcoin. Let's have a look here. I'm going to turn off this mess, make this oversimplified. Basically, what I've got here is the black line will always represent the 200 period moving average. The blue line is always the 100 period moving average, and the pink line is the 50 period moving average. Since the period of time we're looking at right now is the daily candles, these are 200-day moving averages, 100-day moving averages, and the 50-day moving average, which are targets. They're usually acting like a magnet. In this case, I would say it would pull it down lower, or it's already hovering at the 50, which is where it should be. How I read moving averages are slightly different than others. Often what you'll have is the 200 period moving average, and when the pink line crosses above, people say it's a bullish trend until that pink line crosses back below the black line. That's not how I like to use the moving averages. This is how I prefer to treat them myself. I have been trading for 27 years, and I found this to be more handy for me. The distance from here to here right now is larger than it was from here to here. So the further away it gets from the moving averages, the more likely it is to come back down. Okay, so when it's going up, it had a better chance to go down. It didn't. That doesn't mean that it didn't work. It just means that now it's an even better time to be selling, to come back down to the first, second, or even the third moving average. And right now we're hovering kind of in between for Bitcoin of the two here. So there's nothing special. If I have to pick a direction though, I slightly favor the bear camp for the fact that the 200-day moving average is down here for Bitcoin against the US dollar, which by the time this would drop would be hovering around 40,000, would be a strong floor for Bitcoin. It would be difficult to go lower than that. But Robert, Bitcoin's 57,000. What are you talking about 40,000? Yes, I do see also a smaller floor here, which is the lower Bollinger Band. That's the blue lines in the background. That's the other indicator we're going to use. We can see that's hovering at 50,000. By the way, that's also a psychological number. 50,000, 55,000, 60,000, 65,000, 70,000, and 75,000, because those are increments of 25, 50, 75, 100. So those are numbers that traders do use as strong resistance levels and or support levels. So right now we can see 50. It needs to hold 50, otherwise it's in big trouble. And I'm saying if it doesn't hold 50, it's almost certain to hit 40. Okay, that's how I'm going to treat this. If 50 or 49 and 50 can hold, then we're in good shape still. The bulls can resume their bullish targets that you hear about all the time on TV. 100,000, 400,000 potential is easier. But I'm more of a realist. I like to understand how things move. And we can see there's a lot of stuff on the screen. So don't worry about that right now. Just notice that I do see some channels here. I can see here from here to here. So if I draw that from here to here, I can also replicate that. And we can see a nice upward trending channel. If I put a line in the middle, we can see this is slightly bullish in terms of that channel. So we can see 62, 63, 64,000 as very reasonable at this time for Bitcoin. That is a conflicting message of the moving average, this black one down here. So that's a caution. I'm going to make the final decision to the referee down here, which is the stochastics. It looks like it's heading for a decrease. I also can see a lower line here when I look at the peaks of the MACD, the moving average convergence divergence. If I replicate that on the chart, we can see this is a fair target. So indeed, I would still favor the bear camp at this time. Okay, so caution is advised. Use your stop losses. Always use stop losses, I believe. Ethereum, same thing. Even more bearish than Bitcoin, because as we saw, the ratio was Ethereum has gone up a little bit too fast compared to Bitcoin lately. However, it may be deserved fundamentally. So that's a warning that that trend could continue if you believe the fundamentals, which I do. But the charts scream now that Ethereum is too expensive, not just compared to Bitcoin, but Ethereum is too expensive compared to itself. You got the RSI way overpriced up here. It's the highest it's been on this entire chart going back to January. Okay, so it's due for going back down to what we usually aim for is 50. It's currently at 74. So it's more likely to come down. You know, I know the Ethereum bulls are screaming at me right now. I'm on your side. I'm just saying the chart is not on our side right now. Okay, and the good news is that this doesn't look like it's topped out yet, the MACD. So there's a hope that this could keep rising. It's got some momentum still. Okay, but this stochastic will be the first to decline. So you're going to watch for this to come down quite a bit. Then this might come down a little bit. And then what you're going to look for is a fresh cross. You got your red line and the blue line will be crossing down below that. That's an official signal to panic sell. So here we got the moving, the Bollinger Bands. The middle one, we're right at the top. So if you think of a house with the ceiling, the ball can bounce off the floor or off the ceiling, then we're at the ceiling. It's more likely your path of least resistance is to come down. Just like the water chooses to go in a river, path of least resistance is to downside for Ethereum, even more bearish than Bitcoin is. Okay, so USDT, that's just pegged. So let's skip that. Let's go to Binance Coin. We can see here, I'm going to draw a divergence. So let's see what I can find. If I draw from here to here, actually, you know what? I'm going to do that in, let's do that without all this mess on the screen. So I'm going to do that here. So what we're going to do is draw from this peak to this peak and back to the current price. And if I replicate that, you're looking at a bearish move also for Binance Coin. It's due for a sell, even coming back down to the halfway Bollinger Band or lower Bollinger Band, which has confluence with the 50-period moving average, which is the first support. The second one is my big target. I'm looking at some trouble around 480, but more support around 350 is my target for Binance Coin, according to this chart on the daily candles. All right. If you're looking at like right this second, what's going to happen, then the 15-minute candles are slightly neutral. You can see this is what's supposed to be happening. The price is near all three moving averages. It's right in the middle of the Bollinger Band. That means that we don't know if it's going to go up or down. This is neutral. Okay, it's got a slight decrease here, and it's got almost a slight decrease. So it may drop a tiny bit down to 635. Not a big trouble here, but the hourly candles of Binance Coin also very neutral here. So long term, I'm bearish. Medium term or short term is neutral. Cardano, a lot of people love this one. Myself, I'm keeping a close eye. Hourly candles, meaning that every single candle represents 1 hour on this particular chart, says that we could see a little bit of correction right now. However, look at this huge wick. These are institutional candles. Okay, this is heavy whale players coming in here. And what this typically means, this could be a good sign, actually. This could be a very big sign, I have to admit. So what you can see here is typically if you see a range that the prices will stay within, what you'll often see is the banks will push the price up to hit people's stop losses to keep pressure upward while they're selling. And then they let it fall. And they let it fall too much because they know that people put stop losses here and cause more selling while they're buying right before they let it shoot back up. So what I'm saying here is they knew that they saw people having a trend line here. They were putting their stop loss right underneath. They hit all the stop losses. So all those people lost money, but the banks or whales were buying this up because it immediately shot back up. And they loaded in quite cheaply. This could signal a potential massive move, even up to like maybe 170. That could be a big jump. So Cardano, what is that? If it's around, now I'm guessing 170, I don't know, but let's just use that as a hypothetical example. 1.7 minus 1.47. We're looking at a 23-cent jump on 1.47. That means Binance or Cardano rather could jump 15% possibly. If this plays out to be true and ignores the fact that all three moving averages are down here, pulling it lower, even the middle Bollinger Band is pulling it lower, but that signals me to stay on the sidelines, not sell this, because that could be whales have loaded just recently up 4 hours ago. Okay, so what we're going to see here, otherwise, this is coming down and very bearish chart. So I'm on the sidelines because of that conflict. Long term on the daily candles, I'm just going to click refresh here. We can see, oh, wow, it's already gone up quite a bit. This is extremely bearish. This deserves a red line, okay? This is coming down here next. The next big move on this roller coaster is due to be to the downward move. That's bearish. Also bearish, extremely bearish, is this divergence. Going from here to here, from this peak to the current price, if I replicate that, boom, you're coming down to this black line, which is the 200-day moving average. We're looking at about 66 to 70 cent target from 147. That's a 50% loss in Cardano. How long would that take? Perhaps this much time. So we're looking at down here, all of May. By the end of May or early June, we could have a 50% decline in Cardano, ignoring the fundamentals, of course. We're right at the top Bollinger Band. This is actually not just a bad time to buy. This may actually be a good time to sell. We have a double top here. That is an excellent time to be selling. Of course, if you put a stop loss right above this line, again, this is not financial advice. It's just education purposes only. The good sign, I will admit, is this institutional candle here, which shows that whales were buying up super cheap. And that's why you can see the price has risen and may continue to rise significantly a lot more in the future if you believe in the coin.
Robert, I think that was a flash crash. That long candle.
Yeah. So just so you know,
I believe it was Kraken had a flash crash, and then a lot of stop losses were triggered.
Yeah, they do that on purpose. That's what the institutional traders do. That's called a stop hunt. And just so you know, they cause flash crashes on purpose for that very reason. So that means they may love this coin because I've never seen a crash that big in a candle, to my knowledge. Okay. So that's crazy. So this may be like really loading up on this. Like they're like, you kind of like you have Jamie Dimon saying, I hate Bitcoin or it's a fraud. And then he's like, what price did we get in at? Right. So, and then he says, I changed my mind. I regret what I said. And then it goes up. So this could be a massive adoption from a massive amount of money of someone or some small group coming in, which knows something. Okay. I don't. I'm just looking at the chart. This is a terrible chart. This is a perfect chart of a selling chart, actually. I might even use this as a textbook sell. You got your fresh cross to the downside here. We do have a bullish cross here. So that is slightly bullish, but not this. RSI isn't that terrible. It's only 62. It would be worse if it was up here, where it can fall much further to get down to 50. So it's close to neutral. This has to come down before it can come up, but this is really bad. This right here, this divergence screams, let's go back down to 80 cents, something like that. So Cardano, if you love the coin, now would be probably not the smartest time to buy at $1.48. You had a chance at $1.20, even recently so low as 91 cents. If you missed that boat, I would probably stay on the sidelines, wait for another chance to load up at a cheaper price, sub $1.15. You may get that chance because this stochastic needs to come up before it loads up. So you may have a chance. I believe this can come down quite a bit, actually. Right? If we break this sideways trending channel, the red lines, we could fall easily down here. And right now, last thing, we see a head and shoulders potentially forming. Where we have this head up here, and we're just about to get higher than that. Not quite, but borderline. As long as we stay below that line, we are still a potential head and shoulders, which is an extremely bearish shape, which would be the target would be the height of the head, how far it will come down. But that's only if it starts falling immediately and does not make a higher peak than here, which we're very close to. So that's something you're going to want to check up on yourself, because we will get the answer in the next 1 or 2 or 3 days, not in our weekly update in Wednesday. So keep an eye on that. Maybe wait to see if this is going to break up. That fails the head and shoulder. There is no more head and shoulder, and it continues to become extremely bullish once again. All right. But even if you're bullish, wait for this to come down and reset. You may get a little bit cheaper deal to get into this Cardano. DOT. Similar shape. Look at this, Cardano and DOT. So often we find a lot of cryptos, they will simulate one another. We have the same flash crash, same situation there. We also, although DOT is built on a different blockchain that you might want to just look at.
Oh, you're looking at Cardano.
Yeah. Okay, so this is Cardano. So that is the same one. Okay, you're absolutely right. But DOT had a similar crash. And my point is here, I'm going to overlay them. So let's go here. I'm going to compare symbols. I often look at ratios between two different coins. So let's go ADA, USD, enter. And you can see how Cardano has performed. I cannot stand this color. It looks like ugly. So I'm just going to say, let's change this to purple. and make it thick so you can see it. So the purple is Cardano. Dot are the candles. So you can see by comparing two coins to one another, you can easily identify when is a good value and a bad value for a coin. When purple was lower, it caught up to the other one. When purple was higher, it fell to come back down to the other. They're often together. Then there's a divergence. When purple went way too high, what did it do? It came back down. It did it again, went too high, it came back down. And then in this case, they both fell, but the purple one fell more because it was overpriced. What do we have right now? Which one is higher? Purple. How much higher? Way higher than it has even been before. So it's actually the biggest divergence we've had so far, other than here. And look what happened. Cardano came all the way down. And not to mention, both can come down. Then the purple one, the Cardano, has a bigger potential to fall. So DOT would be the safer play here, even if there is a head and shoulders. Interesting. So let's get rid of that. And let's see that we indeed here see more clearly a head and shoulders still intact potentially, because the right shoulder of Cardano is almost breaking that. If Cardano can successfully break that level, then there's no more bearishness in Cardano. It's just about to do that, maybe. This one, however, Cardano or DOT, is clearly still in a very clear potential head and shoulders. It's got a lot more work to do to make me bullish. So I actually like this as a sell right here, because even just to get back to this neckline is very, very easy. And we're near the top Bollinger Band. All the moving averages are lower, even the middle Bollinger Band. And to come down to here where it will struggle and have a 50-50 battle, whether it breaks the neckline or not, the neckline itself is positioned at $28. So going from 39.6 is easily $11 and 50-cent drop. Let's do the math here real quick. So for those that have this coin, 11 roughly 50 divided by 39.6, we're looking at about a 37-38% drop. How long will that take? Give it a little bit of room over here. By June, middle of June, if not sooner. It could even happen in May that we could have such a large drop. 38% drop in DOT cannot be ruled out at this time. I haven't even looked at the lower indicators, but even they're not helping. They're extremely bearish. This is somewhat neutral. It's not terrible at 56, but this stochastic is terrible, and we have a terrible divergence. Okay, what that means is I'm looking at the peak of the MACD to the current price of the MACD, and we can see this is where the price deserves to be, at the lower Bollinger, if not lower. So again, that's the neckline of that head and shoulders. So easily $28. I make big, bold predictions for educational purposes only, but we see how often they end up playing out. So I guess I'm gonna have to dump all these charts into our Facebook group so we can see that and make a record of it.
Can we do XRP and then maybe
I'm on XRP, so you got my thoughts, and just keep me rolling whatever coins you want, whatever is being posted in the chat. So we got here. Otherwise, you can tell I'm just going from the biggest market cap coins, which probably most people know about or have money in. So I'm going from top to bottom in terms of market cap, unless you throw in some really small coins in between. But you can see here.
Yeah, we just a time check. We do have about like 5 to 10 minutes left. So
all right, so I'm going to try to do less than a minute per coin. So what we're going to do is here we got a peak. No more head and shoulders. This is a different, completely altogether shape. So there's not even close to a head and shoulders. So what we can see here, if we had a line here, it did break that trend line. It may hit that, retest, go higher. However, I'm probably going to say this is more likely to come down, and it will come back down below that trend line and keep falling. So whatever this is, Ripple. When we talked about Ripple years ago, we said that it's decentralized, may become, or it's because it's so centralized, it may fight the Securities Commission and win, and then be bullish. It did go bullish. We had trades. If I turn on the drawings, you can see we actually called this sell way up here on the 4-hour candles. You can see we had a sell position way up here at this level, and our target was just down to here. We had our support lines here based on earlier. Look at that. We just bounced off of that again. And I think it's due now to come back down. I'm way favoring the bears, even the middle Bollinger Band. I'm not a fan of Ripple at this particular moment. I just don't see it going up. Let's see the technicals down here. Same thing. These are about due for a correction. We also have a divergence here a little bit. So I can see this strong support line I've put in here at 1.365 as my target. So definitely, currently we're at 169 and I'm looking at 1.36, 40 cents lower. Okay, 40 cents. These are big moves we're talking about. We said 30% drop in 3 days. It happened. And as you can see, this red trend line, if I extend it right, extend right line, as soon as it broke above that red line, what did it do? It changed the trend from a downtrend to an uptrend. Okay, so now what I'm going to do is I'm going to put in another trend line. So what that's going to do is give us a target to see when that uptrend will reverse. Now we're going to see when we fall below that red line, now this uptrend will officially become a downtrend again. So pay attention to that level. Immediately, if it were to fall, it's around 150 that line is going to need to be held. 150 is a psychological support. It is also this red trend line. We need to fall below that. So what are the next coins here that we want to touch on? I can be more picky here. We had ETN, someone mentioned. ETN, I'm going to do always against US dollar. ETN USD. All right, so this is steadily dropping. Could be time now for finding a floor. Okay, so the technicals all scream for me neutrality. You can see here we have from this peak down to here. If I just drag that up to save some time, you can see that is actually quite bullish. Up to 30 cents is possible, or sorry, 3 cents. Okay, so it is possible to hit 3 cents again just based on that divergence, not even figuring the fact that the MACD might make another taller peak, which would make it even higher than 3 cents. It could go up to 3.5 cents. It is possible. Just be cautious of any small coins, like small penny stocks are easier to manipulate and more prone to pump and dumps, which I'm starting to see in here. Some recognition of patterns I've seen over 27 years where it spikes up and kind of drizzles out, spikes up, kind of drizzles out, and the bag holders at the end are stuck with it. So again, spikes up, drizzles out, and even this spike up and drizzle out is a very big pattern of pump and dump coin. Pump and dumpers are really picking on this one, just so you know. So yes, there may be a big pump coming again, but I don't like participating in pump and dumps. There's different coins you can look at that give you better charting than just a neutral reading. This is very neutral here. So this is probably a very low market cap coin. The other one here we had was one. We got one USD.
Yeah, after we do one, we can cover Doge, and we can and we can cover the rest at the masterclass next week.
For sure. Doge is a really good topic. So basically here we got a similar shape. This is probably a smaller market cap coin, very similar to the other one we just did. In fact, I can quickly just overlay them. You can compare. We're going to go ETN USD, overlay that, and you can see the two compared to one another. So if you made me pick one, I would have to go with the ETN because it's cheaper, just compared to these two. You can see at one point they were close again to one another, but right now the orange line is the lower one, which seems like better value, that it can either come up to the other one or that one may come down where this one stays sideways. So more likely they'll come back halfway to each other. That's something to note. And now that we know that, we can look at this chart a whole lot differently. But yeah, so basically, definitely Dogecoin is one to mention for sure. I should update these because now Dogecoin is a much higher market cap for sure. But where do I have it on this list? There it is. So, wow. Okay. Now, this is something Ed and I have been talking publicly at seminars for 2018. We said, don't rule out the junk coin because back in, what was it, Ed? I believe it was 2017 that we warned there's going to be an influx of crazy amount of copycat coins in 2018, and we did see that. We got like 5,000 coins, 90% of them were bogus. And which one do you pick? We saw in the chat a question. Yes, it is smart to maybe put $10 in every coin. You don't know which one will be the winner, but I said, because there's such a wide selection, even of crap coins, I said, why not pick on the one that is meant to be the crap coin galore? It is made as a joke coin on purpose, because I said it is a cute coin with a picture of a dog. Who doesn't like cute animals, right? Especially when a relatively young industry like cryptocurrency may have new adopters, some of which may be people that are animal lovers, or some girls may even say, oh, what a cute dog, I'll buy that coin. And just in the last 3 months, in January, early January, I had actually said here on our calls that I actually cannot agree with the people that were hating on Dogecoin. As a matter of fact, I went so far as to make a bold prediction when Dogecoin was still sub 5 cents this year alone, saying, you know what, I believe actually all it takes is one influencer to make a comment and I had used Kardashians as an example, posting about Dogecoin. 5 days later, Elon Musk tweeted about Dogecoin. Okay, so you can see it was from 5 cents, gone up all the way up to 69 cents. Right now, what do we see? All these channels here, we can see here, wow, it looks like it's expensive. Now, we did mention in our Facebook that you got to be careful, because this chart, although it looks extremely bearish, so we posted it to say, yes, the chart is bearish as heck. It's a textbook example of a sell. You got way overpriced RSI. Currently, it's at 67, closer to go more likely down to 50. The stochastics has been hovering up here way too long. The next direction, whether it's up or down, is the down direction. That's not going to help. Then you've got this about to make a fresh cross. The MACD will cross over. That's a bearish signal that will stay bearish for a while. Even if you connect these two, they're somewhat sideways and then lower. If I do that over here, we're looking at 20 cents, not 63 cents. So the technicals are terrible. However, Saturday Night Live this weekend, you're going to have Elon Musk already tweeting that he's going to say something along the lines of Dogefather, a combination of the Godfather and Dogecoin. So any attention on television may wake up people to the fact that Dogecoin even exists and create some buying pressure. It is not a huge market cap coin yet, but significantly has outperformed. I think it hit fourth place or something. So it's crazy, right? So this is possible that this can continue. I see a lot of people posting about it on social media, and we can see. I would not be surprised if this recommences trading in this upward trending channel. However, and we have a long way down to get there. This is about 50 cents. That's a strong floor. I would be surprised if Dogecoin does not hit 50 cents. Okay, this is technical analysis only, but do not go selling it. Okay, we're not giving financial advice, but I'm even going to go a step further and say, if you are contemplating maybe selling this, it does not make any sense to me to do that when Elon Musk is about to go on TV to maybe, who knows, he'll spur other influencers or celebrities to also come on board the train of posting or talking about it. So maybe it's a last thing, Ed. So there is also this thing in trading the markets that there's a thing called buy the rumor, and then the news comes out that it is good news and it dumps, sell the news. So buy the rumor, sell the news. This could be a case of that. You might have had Elon Musk loading up earlier in the year. Now he's cashing out right when it goes on TV. He's maybe selling the minute he goes on. You never know.
Yeah, just like all the people who bought on 420 day.
Yeah, so the people that think, oh, because he's on TV, it's guaranteed to go up. I'm telling you, from a professional trader's standpoint, it's not the case. He could even say, I love Dogecoin, and then it tanks, because it's too much hype beforehand that was expecting him to say it is now the definition of money, nothing else is money, and they're disappointed in his comment that was good. Okay? Or it's simply time for people to cash out. So that's all I got for you guys today, because that's all I have time for today. But next week, I'll have a much more time to go through thoroughly all the coins and spend a little bit more time on each one.